Justin, I will admit to our viewers, I'm the news guy here. You're the economist, but you just broke an important piece of economic news to me moments ago. So I'm not going to take the credit for it. Tell us what just happened.
All right. So Kevin Warsh was just got through Senate confirmation as our next Fed chair. He got through easily, party line vote with, of course, Fetterman voting as a Republican.
As he often does.
Yes.
John Fetterman of Pennsylvania, very confusing fellow, was a progressive Democrat and now mostly sides with Republicans.
We all have interesting stories. So happy new Fed Chair Day to you, Ali. I know it's like it's probably not quite as good as your birthday. Maybe it's better.
No, but it's a big deal for those of us who follow economics. It's a big deal. There haven't been a lot of Fed chairs. Generally, they serve 10-year terms, and I would argue that they are at some point in that 10 years, possibly one of the most powerful people on earth.
There's a saying we used to use in the Greenspan era, the second most powerful man on earth. And I'm glad we've got this footage going because you can see why the president chose him. The president said he came from central casting, and baby, that is handsome Kevin. There's two Kevins in the White House economics team. That's handsome Kevin. You can see how he got that moniker. And he is not to be confused with Happy Kevin, who smiles whenever he lies and lies whenever he smiles.
Kevin Hassett.
Yes.
So let me ask you about this Kevin Warsh. On paper, if you're a Martian and you show up on paper and say, who is it who leads your central bank? And you see his resume, pretty good. Like he checks all the boxes. I'm a little alarmed because during his confirmation hearing, he got asked not a difficult question. It wasn't an economic question. It was just a simple question to test that Elizabeth Warren asked him, largely to test whether he would maintain the independence of the Fed. One of the biggest and most important things about the Central Bank of the United States is that it is independent of policymaking. It's why the terms don't match presidential terms. They should do what's right as opposed to what the president wants them to do for political reasons. She just asked him who won the election of 2020. Couldn't provide an answer to that.
I mean, to be fair to handsome Kevin, it was a long time ago. I can't remember back that far either. Look, and that gets to, I think, the most important thing. You're right to say, yes, they just announced Kevin Warsh as the next Fed chair, but actually they haven't announced the most important thing, which is which Kevin Warsh.
Right.
Because there's at least two Kevin Warshes running around Washington. There's a fellow by the name of Kevin Warsh who is devastatingly handsome, who was a member of the Federal Reserve Board between 2006 and 2011. Mm-hmm. That Kevin Warsh, through that entire period where inflation was too low, the recovery was too slow, the US was more at a risk of deflation after the financial crisis than of anything else. That Kevin Warsh, everywhere he'd look, he'd see inflation and be scared and worried, even though it wasn't anywhere to be seen. That Kevin Warsh was what economists call an inflation hawk. Mm-hmm. Someone who's less worried about the fact that unemployment remained high and remained too high for too long during that economic recovery, and more terrified that inflation might start. Some people even call these folks inflation nutters. That's what the Brits call them.
Huh.
That Kevin Warsh, who, by the way, has the same birth certificate as the bloke who turned up at the Senate confirmation, who was appointed by a president who said he wants someone who believes in low interest rates, who will cut interest rates to 1%, even though we're currently at a moment of nearly 4% inflation.
Right.
This was a Kevin Warsh. The bloke who turned up at this Senate confirmation claims to care a lot about Fed independence. And I want to make clear what that is. You were wonderfully clear, Ali. Fed independence is I'm going to serve the American people because that's what the Federal Reserve Act told me what to do, versus I'm going to serve the president's private political interests. You don't actually get a choice. The law tells you what to do.
Right.
The law says you've got to look at the data and figure out what's best for America and shut the president's political views out.
Right.
That's what got Jay Powell in a lot of trouble.
Yep. Jay Powell, by the way, a Republican, appointed as the chair of the Federal Reserve by President Trump. He keeps claiming it was Joe Biden. It wasn't. Joe Biden got appointed to the board. He was appointed as chair by Donald Trump to replace a Fed chair who hadn't finished her term. So Powell was Trump's
Janet
choice.
finished her term. Finished her term. So Janet Yellen was the previous Fed chair, but there had been a long norm through the past half dozen presidents or so that if someone's in the middle of their term, if someone is serving to appoint them for another term. The term as Fed chair is 4 years. You appoint them again if they're doing a good enough job. Janet was doing a terrific job. Donald Trump, I know this will surprise you, looked at a short woman from Brooklyn with a Brooklyn accent and said, even though she's done a splendid job with the economy's in good hands, she's not from central casting. So he quite literally had this conversation. It's deja vu all over again. He's like, I want someone from central casting. Jay Powell has that handsome grey hair. He was really hot for grey hair back then. And so literally we appointed the next Fed chair based on his, for Jay Powell, it wasn't boyish good looks, it was distinguished good looks.
Right.
Turns out Jay was terrific. Fantastic. So maybe there's something to appointing a bloke based on their looks. But then the president very quickly soured on him. A lot of crushes do when you're in high school. And so then he decided what we wanted was boyish good looks rather than distinguished good looks. So we got rid of grey-haired Jay for the boyishly handsome Kevin. If this sounds like we're not talking about economics, we're talking about soap opera, I can't help you. They've become inextricably linked.
Because literally the work that gets done at the Federal Reserve is, boy, that's some wonky stuff. I mean, they've got like dots and plots and charts, and they really study stuff. And it's a model for central banks around the world, right? Every country has a central bank. The UK, Canada, Japan, all of them have central banks. And those that maintain independence from their political system tend to come to similar conclusions and do similar things there, and they should be quite boring. So if our viewers right now don't know what we're talking about, that's generally good. You don't need to know, right? There are countries where that doesn't happen. Turkey has intervened, Zimbabwe, Venezuela, Argentina. Guess what? They all have something in common, right? These are not really stable places where the currency people don't trust as much because they don't believe that those central banks are working independently. That is so central to the strength of the U.S. dollar and the sense of America as a reliable country.
Yep. So, look, very simple story is if economics starts to sound like soap opera, you're doing it wrong. Keynes once said he wanted economists to be as boring as, I believe it was dentists, but it may have been plumbers. I think it was dentists. And he's absolutely right, which is if you can just go about your life and pick up your kids from school and make a delicious dinner and go for a swim, what a glorious, marvelous world that is.
Yep.
Because if you're thinking about economics, it's that you're worried that inflation's too high and you've got to take that wheelbarrow of money and spend it before it becomes worthless. It's that you're worried about losing your job. You're worried about the dollar being devalued. You're worried about a financial crisis. There's no one who ever said, I want to spend more of my life thinking about and worrying about these economic issues. And so, it's much better when we're dull.
But it's wild because that's what we talk about now. Everybody talks about it because you know what? Inflation, there's no way to gaslight people about it. You can't tell people their gas is cheaper when it's more expensive. So I want to talk to you about this.
Never say never. The president just said we're suffering through fake inflation. You can gaslight people.
So let's look at a few examples of this. I'm just going to try and pick one here. Well, let's look at, we have a full screen. It's number 4, Christina. It's energy prices, okay? This is the one that hits everybody. Gasoline prices are up. This was as of March, by the way. These numbers are out of date at this point because they've gone up so much since March. But as of March, they were up 20%, the beginning of the Iran war, up 20% year over year. Fuel oil was up 44%. Since then, gasoline has caught up. So we're up about 50% on gas prices. It doesn't matter whether you drive. I don't know what you drive and whether you drive, but some people have. I think you told me you got an electric car, in fact, recently.
I recommend it, mate. It's terrific.
So, but even if you don't drive at all, this thing, oil energy prices affect your life because farms use diesel. Everybody who transports everything uses diesel. Airplanes use fuel. You buy a lot of stuff from overseas that come on airplanes and then on trucks. Food preparation uses energy. Putting aside the fertilizer, which is its own problem from the Strait of Hormuz, there's nobody who's not affected by higher energy prices. Like I just literally can't imagine anyone whose life in America is not affected by higher energy prices, whether or not you drive.
Absolutely. So, yes, and yes, everything you just said's right. But when people think about about rising oil prices, they really think about the 1970s. And in the 1970s, it really was a crisis. A very similar thing, trouble in the Middle East, led to restricted trade of oil, which caused the price of oil to skyrocket. The specific politics are different, but the basic mechanics are remarkably similar.
Yeah.
That led to two things that we didn't realise before that could occur at the same time. A stagnating economy. We didn't have as much oil, so we couldn't run the machines and all of that.
There was actually a shortage at that point in America. We don't have that today.
Right. And we saw prices go up.
Yeah.
Inflation. So we had stagnation and inflation. If both those things are happening at the same time, wouldn't you wish there was just one ugly word that jams them both together? What would that word be?
Stagflation.
Yeah.
Yeah.
So that's what happened in the 70s. I want to make the case that it's not quite the right script to think about this time. Really, two things happened. The first is the US economy over time has become remarkably less energy dependent.
Right.
It is still true that everything you said, that it's one of our most important inputs and it pervades societies in ways that you would just never imagine. All of that's true, but less true than that back then.
Right.
And the easy way to think about that is to think that farming and manufacturing and stuff that needs fuel was a big part of the economy. And today we're a service sector. We're predominantly a service economy. And we've got enormous improvements in fuel efficiency and things like that. And so the amount of oil per pound of GDP has gone down a lot. So we're much less dependent. And the other is that as a result of that, partly, the US now is roughly energy independent. We basically make as much oil as we use, but that doesn't fully insulate us, as we're all learning right now.
So when we talk about inflation, there are actually various measures of it, various ways of doing it. We have had an inflation measure that has just come out, and it's the Producer Price Index, the PPI, and then there's the CPI. And within that, there are the headline numbers and the core numbers. The PPI is the one we've got now, the Producer Price Index. Can you tell us in the most basic terms for folks who have never taken an economics course and never will and never want to, what does that mean?
I just want to be clear, Ali. I mean the following as a compliment. My word, I might be about to be out-nerded.
That was pretty nerdy even for me.
He's trying to figure out his favourite of all the price indices, and we haven't even gotten into the PCE deflator, the GDP deflator. Oh, goodness gracious me, there's going to be so much fun. People are tuning out as we speak. But you and I are here. Okay, look, the Consumer Price Index measures the cost of living. That's what it's all about. Just rose 3.8%. You can think about the economy as involving lots of stages of production. You pick the wheat, then you bake the bread, and then you make sandwiches, and then I buy the sandwich. The Producer Price Index, so let me go back actually. Consumer Price Index, consumer means it's the price of stuff consumers buy.
Right.
Producer Price Index, the hint's right there, it's the price of stuff producers buy. So my local deli buys bread to make my sandwich. And so it's earlier stages of production.
Right.
And so if you see producer prices rising, if my deli starts having to pay more for its bread, well, it's actually going to be paying more.
There's a choice. They can decide not to raise prices, so they think they'll go down next week or whatever, or they can say, it's what we pay for bread, you have to pay a premium for bread too.
Exactly. So this is where you can see future price pressures starting to loom further back, higher up in the production chain.
So, like oil prices, I like oil prices to gas prices because generally speaking, there's no glitch there. If oil prices go up 50%, your gas prices are probably going to go up 50%. Tell me about the link between Producer Price Index, your deli paying more for bread, and what you will pay. If the Producer Price Index wholesale inflation goes up, does that mean retail inflation will go up?
Typically, yes. So I want to go back because you actually said something really deep and you made it sound really simple. So folks at home, we're used to paying for gas. Pull into the gas station, the numbers are 6 foot tall, and now they're getting really big.
Yeah.
But on the news, we read a lot about oil, and oil is only one input into gas. What you just said is, and so when you read or see news about oil markets, and none of us are out there buying West Texas Intermediate, that, by the way, is
in barrels, yeah.
Right. It's my favorite flavor. It's delicious.
Sweet. It's light and sweet.
Oh, nice. I love it. Much better than that Brent stuff. So as a basic rule of thumb, if you see on the news oil prices are going up 10%, you can expect gas prices to go up 10%. It's not going to happen the next day, but it will happen within a couple of weeks.
Right.
And early on, for instance, in this war, that rule of thumb you just gave us, Ali, was really helpful because what had happened is oil prices shot right up, and folks like you were calling me and they were saying, "Oh, what's going to happen to gas prices?" I'm like, "Got this crazy rule of thumb for you. It's eventually going to feed through."
Right,
okay?
and it did.
Yeah. Now, and that's because oil is basically the key ingredient in making gasoline. With producer prices, you're absolutely right. If my deli pays more for bread, either its profits can fall or you can pass it on and my sandwich price goes up.
Right.
If the price of bread is going to rise and stay high effectively forever, delis can't get by with lower profit margins. So anything that raises producer prices in an enduring way will end up raising sandwich prices. And to be clear, this is a metaphor for the whole economy.
Right.
And it will do so one for one, just the way gas and oil worked. Now, it doesn't always work like that in practice because sometimes the bread price goes up and the bread price comes back down.
Right.
And my deli's like, oh, do I really want to annoy my customers by changing prices all the time?
Right.
And
or
that's
if you're
why they
big, if you're like a massive company, you might say, I can absorb this, or I can cut prices elsewhere, or whatever. I don't want to lose my customers. But your deli is not a massive company; they don't have influence. In fact, Christina tells me we've got a question about this. I want to just take a look
about the producer price index. You have an amazing audience.
So here we go. How does the market continue to rise? This is great question. I'm really glad for this. It's from Big Bank Fella. In the chat. How does the market continue to rise despite hot PPI and CPI numbers? That's an excellent question. And we'll get to it a few times through the course of the show because I want to talk a little bit about the K-shaped economy. But let's just ask that basic question. We've got inflation. It's relatively persistent and it's been exacerbated by both tariffs and this war in Iran. And yet, let's go back to those Martians. If they landed on Earth and said, show me your stock market, they'd say, oh my God, this is amazing. You guys are doing so well. Record after record after record.
No, you need more sophisticated Martians, mate. So you're right. A simplistic Martian, which, by the way, is what a lot of the current White House rhetoric is, says the stock market's at an all-time high.
Yes, they say it in answer to no matter what you ask them. That tends to be the answer.
Remember Pam Bondi? What was she talking about?
She talked about Epstein victims, and she talked about the stock market.
I have often thought that sexual trauma and the Dow Jones were closely related. So thanks, Pam. I forgot I'm in America. I have to tell people when I'm being sarcastic.
We get it.
I don't actually really thank Pam Bondi for that. You hear, right, so first thing I want to point out, stock markets tend to rise. You look at any graph, they rise over time.
Over time, they tend to rise, yes.
And what's normally happens is the president is focused on governing and legislation, and he or she's really busy. It's been he so far, but, and they care about the broader wealth of the American people than a narrow stock market gauge, and so they just don't talk about it. But if you look at the number of times the stock market hit record highs under any president, it's literally hundreds of times. The only thing that's different right now is the information age that we're in, which is every time it happens, the president declares immense success.
Yeah.
The second part of this is, why is the stock market high? And this is where just always be careful about any explanation that has only one factor going on.
Right.
So the idea that there's just one economy, one thing, that's the whole thing. Look, here's the very simple story, which is right now you think probably stocks have got a lot to do with fear about the war, some fears left over about the trade war, some optimism about AI, positive earnings reports, blah, 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 a whole lot of things. The fact that the stock market is at an all-time high does not mean the stock market loves the war, for instance, or it doesn't mean that it loves the trade war. If what you want to do, here's a trick. If what you want to do is figure out, does the stock market like some particular news development, what you do is you zero in and you look at how it responds in a very narrow period of time when that's the only thing that happens.
Right.
So if Trump gives a speech that says, or tweets out, I am going to destroy another country and wipe it from the face of the earth, you can compare what happens in the market just around that period of time, because during that period of time there was no AI news, there was no earnings news, it's just a narrow period of time.
Right.
If you want to get super nerdy, that's what financial economists call an event study. Now, it turns out if you do that over the past few weeks, every single time the president has leaned into his belligerence, the US stock market has fallen.
Right.
Every time it looks like he's going to taco, Trump always chickens out. Every time it looks like he might backtrack, every time it looks like the P stubs are out, stocks rise.
Right.
By the way, so what you learn from that is traders are trading as if they believe the value of stocks is higher if we don't go to war than if we do. By the way, we saw the same thing during the trade war. I don't know.
Yes.
Do you remember
Every time
all
he
of-
said he was pulling back on stuff, stock market goes up. Every time he throws out one of those insults that I don't like this country, so we're going to double their tariffs, you got a problem in the stock market
Yeah, so
and the
Ali,
bond market.
yours and my relationship, it just feels like a slow motion replay. We spent all of 2025
Yeah.
watching the ups and downs due to
Yes.
a misguided policy that markets hated.
Yes.
That still often led the overall market was still all right.
Yeah.
And now we're spending 2026 watching the ups and downs of mistaken policy that the market hates.